Walgreens on Thursday reported fiscal second quarter sales that beat Wall Street's expectations, but lowered the high end of its full-year adjusted earnings outlook in part due to a challenging retail environment in the U.S. The company also posted a steep net loss for the quarter as it recorded a hefty goodwill impairment charge of nearly $6 billion related to its primary care provider VillageMD. Walgreens has been closing dozens of VillageMD clinics amid financial woes and sees the business as critical to its ongoing push to transform from a major drugstore chain to a large healthcare company. The results come as Walgreens' new CEO, Tim Wentworth, works to slash costs and steer the company out of a rough spot. Shares of Walgreens fell 30% last year as the company faced weakening demand for COVID products, low pharmacy reimbursement rates, an unsteady push into healthcare and a challenging macroeconomic environment. In a release on Thursday, the company said it is confident it will meet its goal of saving $1 billion during fiscal 2024 through its ongoing cost-cutting program. Walgreens has laid off employees, closed unprofitable stores and used artificial intelligence to make its supply chain more efficient, among other efforts. Here's what Walgreens reported for the quarter. Walgreens narrowed its fiscal 2024 adjusted earnings guidance to $3.20 to $3.35 per share. That compares to the company's previous outlook of $3.20 to $3.50 per share. Analysts surveyed by LSEG expect full-year adjusted earnings of $3.24 per share. Walgreens said the new guidance reflects the hurdles facing retailers in the U.S. and an early wind-down of sales-leaseback programs. It also takes into account lower earnings due to Walgreens' forward sale of shares of drug distributor Cencora, formerly known as AmerisourceBergen. The company said a stronger performance in its pharmacy services segment and a lower adjusted effective tax rate helped to offset the factors dragging on its earnings. The company did not give a new revenue forecast for the fiscal year. Walgreens has not provided that guidance since October, when it said it sees $141 billion to $145 billion in sales. The company reported a net loss of $5.91 billion, or $6.85 per share, for the quarter. That compares with a net income of $703 million, or 81 cents per share, for the same period a year ago. Excluding certain items, adjusted earnings per share were $1.20 for the quarter. Walgreens said its fiscal second quarter results include a $5.8 billion non-cash goodwill impairment charge related to VillageMD. The company booked sales of $37.05 billion in the quarter, a roughly 6% jump from the same period a year ago. The company said that increase reflects sales growth across its three business segments. But Walgreens' U.S. healthcare division stood out as sales jumped about 33% in the fiscal second quarter compared to the same period a year ago. Revenue for the segment came in at $2.18 billion.